The first meetings are always general, but let me just focus on some of the real stats that we have in the United States. So, for example, right now versus 20 years ago, there are only half the number of public companies that are registered and listed on stock exchanges. So that means fewer types of companies for real investors to invest in. And if you look back 20 years ago at the high water mark of IPOs, there were about 700 per year that were coming out back in '96 and around that time. Now it's maybe 100 last year. Look at the number of banks that we have. In the last 8 years, we have half the number of banks that we had back in 2008. And that's not because they all failed. That's because there has been a policy by the bank regulators to either merge them out or drive them out of business. And so that has a real effect, especially on the community banking side with small businesses. And if you look at small business loans, up until 2008, the growth of commercial industrial loans above $1 million and below $1 million were pretty much consistent. But after 2008, there's been a divergence of loans above $1 million have increased by 40%, loans below $1 million have decreased by about 15% or so. And so what that means, it's harder for small businesses to get loans. And why? It's because it's more costly for banks to originate and service those smaller loans than the big ones because of all the paperwork, all the regulation that has been imposed upon them by the bank regulators in the wake of Dodd-Frank. So all of that has a real effect on our economy, and that's why Jeb Hensarling calls this the non-recovery recovery. And so a growth of GDP of 1 point whatever percent is not really a sustainable thing for our economy.
I get that's certainly been the White House line of thinking here, get banks lending, get small business moving again. But Paul, you're close to the administration. Is there any talk about the politics of all of this? President Trump ran to help the forgotten man and woman in this country, and so far the biggest beneficiary in the stock market has been the bank stocks. There's all this talk of deregulating Wall Street, and it's all being engineered by the former #2 banker at Goldman Sachs, Gary Cohn. The optics and the politics behind all of this. Is that something that's being discussed?
Well, you have to remember that financial services is the lifeblood of our economy. And that's where capital is originated for companies, and through the stock market and through loans from banks. And then now we have even alternative sources of funds through private equity and venture capital and other things like that. But you know, it all needs to function well together, and we need to wring out unnecessary costs and unnecessary burdens. And so I think you're looking at just too short of a term to say, oh, well, the bank stocks have been the winners here over the last couple months. What I think we have to keep an eye on is for the next 4, 8, 12 years, and that's what we really need to build a firm foundation so that businesses of all sizes can build and go forth.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.